Hey everyone, John Hunter here from School of Trade. Today we're going to be taking a look at a long trade out of this wedge here on the S&P 500. Now, we just hit the open. We just hit 930, and that's where we're seeing a little bit of rattling around. Looking for a long at 78 and a quarter, and then looking to ride that move up into some relatively decent targets. Our stop's going to have to go below this low down here. So below that low would put us at 75 and 3/4. So our stop would be at like 75.50 or so. Looking for the move back up to the upside. Now, we have yet to break out of this wedge, and there could be an argument for a sell as well to sell this back down. But the problem is we had major double bottom support here at 73 and a quarter. The buyers are already demonstrating that they have control of this market. So even if it does trigger short, I'm not as interested in selling and not anywhere near as much as I'm interested in buying. Now, the first target, we're going to go for a quick small little guy right here, taking 2 off. At 79.5, stop is going to go below this low here. Let's get that set. And then the next target is going to go up to about 2 to 1 for our risk. 81 and a quarter is right around that area. There we go. So looking for that first push up, we're entered in long 78 and a quarter above that little minor swing there. First target's coming off at a point and a quarter. The second target is coming off a little bit higher up at 81 and a quarter. That's going to be 3 points for that one. And our stop is down here below the lows. Now our stop is a little bit lopsided right now, but for this type of setup, and because we're entering a little more conservatively higher up, it's kind of like the market's way of telling you, well, you entered late, not necessarily late, but you entered in with a little bit of a delay, waiting for a better signal because of the open, so you're going to have to pay for it, and that is where we see a little bit of a lopsided stop. As soon as we see this fill our first target, our stop is going to go immediately up to underneath this bull candle to try to give it as much room as possible, and if we really start blowing through the highs, we can move it to break even and catch a nice little push back up to the upside. So looking at our first target at a point and a quarter, taking 2 off there, and then 3 points after that. A relatively strong move higher that we're anticipating here. It'll give us 8.5 points on the move. So we're looking at 34 ticks total. So 34 ticks at $12.50 a tick. It's $425 on the move higher. Now it is the S&P, and if you can afford to trade larger size, you are definitely more than welcome to. It's definitely the market to do it on, where you're trading hundreds of contracts at each price level. You can get away with trading really big size and looking for smaller targets with bigger size equals bigger profit, right? So that's kind of another option you can look at it. I'm in long 4 contracts just because we're around the open and we have to use a little bit of a lopsided risk here. So just kind of nullifying a little bit of risk by going in with 4 instead of a normal amount. But looking at the first target at 79.5, then we can lock our stop in a little bit farther as we see us continue on, and then we'll look for 81 and a quarter. So we're getting a nice strong drive so far this morning. The open hit and they tried selling off. We saw that small little bear candle. All it really accomplished was it came down back to the wedge lows, tested it, and then shot through the highs. So, I mean, regardless of what the sellers tried to do, they didn't do it very successfully. So now we're seeing them fail. We're seeing them get stopped out, especially above these highs here. That high above this area here, 78 and 3/4. A lot of sellers got stopped out above that swing. Now we're just looking for a little more continuation. So we'll give it a little bit of time here. A little bit of a slower start to the morning, but we'll see if we can get that fill at 79.5 and then another push high to 81 and a quarter. All right, driving a nice push higher here. We're testing our target, and then we get it filled, 79.5 fills. So now, again, I don't want to necessarily choke this trade out, right? I don't want to put my stop right to break even because there's a good chance that I end up just getting whipped out of the trade. So instead, stop is going to go underneath this low for right now at 76 and a quarter, and we'll look to kind of trail that up as these candles complete. Now, honestly, I really don't want to see this low broken at 78 and a quarter, but at the same time, knowing how whippy we've had as a start of the morning, I need to give this a little bit more room. I want to see it really get a good push, so then I know I can safely move my stop to break even. Instead of moving it now, then the S&P, in typical S&P fashion, comes back, whips you out, and then shoots right back up into your target. We've all been there. So instead of dealing with that, we're going to wait for a little bit of extra conviction to the upside. Extra conviction to me would be probably around this area. You know, at least test that 80 and 3/4. Show that you want to try to get up to that location. If they can hit that 80 and 3/4 area, then we can lock our stop in to break even and kind of reduce that risk as much as possible. But as for right now, we're still sitting in the position. We've got our stop down at 76 and a quarter, target up at 81 and a quarter, and just looking for a little bit more follow through to our targets above. All right, so we're hitting that 80 3/4 area. Now that I know that we've gone a decent distance, I can lock my stop into break even here, 78.5, knowing that this is an area of resistance, and if it turns off of this area, I don't want to give anything back. Arguably, there will be some people taking some profit here at 80.5 ahead of this level and just trying to get out a little bit early. The overall movement that we're seeing right now, it's expected to see this type of breakout to go a decent amount here. I mean, we're looking way past our target. I mean, we're looking up at 81 3/4. We're taking off at 81 1/4. So even though there is slight resistance here at 80 3/4, pattern completion really shows us that we should be going higher by another point or so. And our target is firmly ahead of that area, which is perfect. So we've got room for the trade to work. Now it's just a matter of seeing if the buyers want to break through this level on this candle or if they're going to take a little time. Looks like they want to break it now. There we go. So we're breaking it. See if they can drive up into the target. And there we go, we get that target filled. So a beautiful move to the upside there, gorgeous move on this breakout, and that's kind of exactly what we're looking for on the start of the morning, right at the open. Now, the overall pennant setup, we had a nice channel working its way higher. It just got stuck inside here, and that formed that little pennant, triangle, kind of a flag, whatever you want to call it. And we finally break out. That's the area that we're looking to hop in long. We drive that thing right up into a beautiful move, and I believe that just turned off of exact measured move of this ride higher. Oh, no, it came one tick away. Ahead of that high, but either way, we're out of the trade. Beautiful move to the upside. Again, the overall press higher got 34 ticks, so we're looking at $425 on the trade with only 4 contracts. Definitely not too bad. So that's going to do it. If you have any questions about it, feel free to shoot an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.